Good morning, everyone, and welcome back to the Daily Hunt for Multibaggers. It's Monday, February 9th, 2026, and we're kicking off the week with some fascinating market commentary.
That's right, Ethan. Our AI-driven analysis of social media discussions from yesterday, February 8th, flagged quite a few stocks with increased chatter. We saw a broad range of interest, but today we're really focusing our lens on a couple of prominent names where the debate is particularly heated.
Absolutely. The overall market sentiment we observed was, well, a mixed bag, leaning slightly cautious in some corners, but with pockets of strong optimism around specific growth stories. We're really digging into the details today to see what's driving that.
Let's jump right into our first candidate, Reddit Inc., symbol RDDT. Ethan, the chatter around this one was intense yesterday.
It certainly was, Brooke. The sentiment for RDDT is actually distinctly bullish amongst users right now. There's an overwhelming sense of confidence in its future stock performance, driven by some pretty compelling catalysts. Many are viewing the current price as, a prime dip buying opportunity, expecting significant growth. Users are pointing to a potential forward PE of 22 to 25 based on an anticipated 55 to 60% growth for Q1, and they see the advertising revenue as incredibly lucrative.
That all sounds great in theory, Ethan, but from a KPI perspective, I'm seeing some serious red flags. Our analysis suggests a stay away for RDDT, and it's actually a downgrade from its speculative gamble rating just a couple of days ago. The current price-to-earnings ratio is 53.57. While I appreciate the optimism about future growth, that's an exceptionally high PE, meaning a lot of future potential is already baked into the price. But Brooke, you've got to consider the future. Users are highlighting the undervalued data licensing potential, especially with existing deals with Google and OpenAI. There's a strong belief that future legal settlements or renegotiations could unlock substantial new revenue streams. Plus, the recently announced $1 billion stock buyback is seen as a huge catalyst to drive up the share price, with many users feeling the company's current market capitalization is incredibly cheap. Q4 earnings beat estimates too, which is a great sign. And I agree, those are potential positives that could improve some KPIs down the line. But let's talk about the present. My biggest concern beyond the PE is the insider trading activity. Over the last 6 months, insiders have been net sellers, divesting a substantial 42.13% of their shares. That's a significant bearish signal, directly contradicting the prevailing bullish user sentiment. Those closest to the company aren't buying in, and that should give us pause. Also, the current price is almost 50% down from its 52-week high, indicating extreme volatility.
Fair point on the insider activity, but the community truly believes this is a powder keg ready to ignite.
A powder keg indeed. High risk, high potential. However, when I weigh the high current valuation and the insider selling against the future-looking optimism, my models are screaming caution.
All right, so for RDDT, despite the strong community optimism, our AI-generated insights, especially factoring those KPIs, lead us to a verdict of stay away for now.
Exactly. Next up, let's talk about Palantir Technologies, symbol PLTR. This one also saw a good amount of discussion, starting with a bearish post, but then sparking a lot of counterarguments.
Yeah, the initial post was quite bearish on the broader market, even calling for put options on PLTR. But, the comment section really pushed back. Many users expressed confidence in a market rally, with some calling for all green days. What really stood out to me was how many users highlighted PLTR's evolving profile, increasingly seen as a stable GovTech/defense AI hybrid, rather than a purely speculative high beta stock. Analysts like Daniel Ives even named it a top AI stock to buy.
While I see that pushback in sentiment, Ethan, my KPI analysis still points to a stay away for PLTR, consistent with its long history of stay away ratings on our show. The valuation multiples are just astronomically high. We're looking at a price-to-earnings ratio of 215.71 and a price-to-book of 43.91. These are exceptionally elevated figures, implying an enormous amount of future growth is already priced into the stock. Even with strong 70% revenue growth and 36% net profit margin, meeting these sky-high expectations is a huge ask. But Brooke, the positive news is significant. Recent partnerships, like the one with Cognizant for AI-driven healthcare modernization, really solidify Palantir's expansion into critical sectors. And, the comment section showed a strong belief that PLTR is becoming more institutionalized, less of a frothy retail Momo. The fundamentals, including that strong net profit margin, show a robust business. I appreciate the growth story, truly. But even with surging AI adoption and new partnerships, the stock was recently down 7.3%, indicating that positive developments are struggling to meet the market's extremely high demands at this valuation. And let's not forget the beta of 1.687, which means it's highly volatile. In an uncertain market, that amplified movement means higher risk of significant drawdowns. Plus, again, insiders are slightly net sellers over the last 6 months, a small but consistent signal of caution from those who know the company best. Okay, so even with the exciting AI narrative and strong growth potential, the numbers are just too demanding right now for new entry. Precisely. For PLTR, based on these AI-generated insights and the current KPIs, our verdict remains a firm stay away. All right, time for our final roundup of today's candidates based on our analysis. Investigate as buy, none. Investigate as cautious buy, none. Investigate as speculative gamble, Reddit Inc., RDDT. That wraps up today's edition of the Daily Hunt for Multibaggers. This podcast is for informational and entertainment purposes only. The content is generated by artificial intelligence and does not constitute financial advice. Listeners should conduct their own research or consult a licensed financial advisor before making investment decisions. We are not responsible for any losses incurred. The market is a wild place, and knowledge is your best asset. Thanks for tuning in, everyone. We'll catch you tomorrow for another Daily Hunt.